If you've ever felt overwhelmed by the world of finance, it's probably because you're trying to use someone else's playbook. The market isn't one giant game, it's a dozen different games being played at the same time on the same field. If you're a dividend dreamer trying to trade like a crypto nomad, you're going to get crushed, not because you're bad at investing, but because you have an identity crisis. I'm going to break down every major type of investor in 2026, and by the end of this video, you won't just understand the market, you'll know exactly which door you should be walking through. 1. The value investor, the bargain hunter. This is the Warren Buffett disciple. They look for companies that are on sale. They don't care about the hype, they care about the balance sheet. The goal? Buy $1 for 70 cents. The downside? You might wait years for the market to realize you're right. 2. The growth investor, the futurist. They don't care about today's profits, they care about 2031. They invest in AI, biotech, and companies that are disrupting the world. The goal? Find the next Amazon or Tesla. The downside? High volatility. Your portfolio will look like a roller coaster. 3. The dividend investor, the passive income collector. They treat stocks like a rental property. They want a check in the mail every quarter. The goal? Build a money machine that pays for their lifestyle. The downside? Usually slower growth and sensitive to interest rate changes. 4. The indexer, the set-it-and-forget-it pro. They've realized that trying to beat the market is a fool's errand. They buy the whole market, the S&P 500 or total world funds. The goal? Average returns with zero effort. The downside? You will never get rich quick. This is a 20-year game. 5. The momentum trader, the wave rider. They don't care what the company does. They only care that the chart is moving up and to the right. They follow the trend until it breaks. The goal? Short-term gains from market excitement. The downside? If the music stops and you don't have a chair, you lose everything. 6. The strategic hybrid, the 2026 special. This is the rising group. They are 80% indexers for safety, but 20% aggressive in high-leverage assets like Bitcoin or specific AI startups. The goal? Protect the floor, but keep the ceiling infinite. 7. The crypto nomad. They believe the legacy financial system is a sinking ship. They are all in on decentralization, NFTs, and altcoins. The goal? Generational wealth in a single bull run. The downside? Constant stress and the risk of rug pulls. 8. The YOLO trader. Fueled by Reddit, dopamine, and high-risk options. They're looking for the one-shot win. The reality? 99% of these investors end up as the fuel for everyone else's profits. So, which one are you? If you're a student with $100, you have the greatest asset of all, time. You can afford to be a growth investor with an indexer's discipline. The wealth gap we talk about on this channel is often just a consistency gap. Pick the style that fits your sleep schedule. If you're checking your phone every 10 minutes, you're a trader. If you're checking it once a month, you're an investor. By June 2026, the noise is only going to get louder. Decide who you are now so the noise doesn't decide for you. Like this video to help other students find their path. Subscribe to join the 1% who are actually playing the long game. Stay strategic. I'll see you in the next one.